My name is Nick. I'm on the Vancouver Startup Week team this year. First and foremost, I'd just like to take a moment to acknowledge that we are grateful to be gathered virtually here on Indigenous land, regardless of where you are joining us from. I personally am grateful to be on the traditional, ancestral, and unceded territories of the Musqueam, Tsleil-Waututh, and Squamish peoples. I am privileged to live, work, and play on these lands. Being said, I'd like to thank all of you for joining us here for Vancouver Startup Week 2021. And welcome to a session with Boast.AI, capital efficient ways to grow from $0 to 10 million, hosted by Eric and Alex. This session is part of the Vancouver Startup Week growth track and is proudly supported by Innovate BC. Innovate BC is a Crown agency that provides small businesses around the province with funding, business coaching, and educational content. They're helping entrepreneurs and founders start and scale their businesses and adapt to the changes brought on by COVID-19. If you're looking to support your business, make sure to stop by their booth to learn more about how they can help. If that is our audience, if you have any questions for our speakers, please feel free to post them in the Q&A in the Whova session. You can also upvote any questions that other attendees have asked that you find are interesting. And now I'll pass the mic over to Eric and Alex. We'll begin the session.
Thanks, Nick, and thanks for having us. On behalf of Boast and Alex and I, we're happy to be here and always enjoy being part of Vancouver Startup Week. And I think I mentioned on another session, we can't wait to do it in real life. Hopefully soon. We're getting closer, but this is the next best thing. And the plan today was to talk about exactly how to grow from kind of zero to multiple $10 million plus in revenue, and that's where joined here by our co-founder and CEO Alex. And it's going to be fun for me because Alex and I get a chance to talk, but I get to ask him some questions I've always wanted to ask and hear the full story of Boast's journey. And I think it's interesting too because of the work that we do, some of the things that we've worked with some of our clients and the things that they've gone through. So maybe to start off, we'll do a quick introduction and then maybe, get Alex to do a quick introduction and we'll go through and have a bit of a chat around these things. But, if there's any questions that anyone has specifically, feel free, like Nick was saying, to post in the chat, where we'll have some time at the end if there's anything specific and go from there. But, I've been with Boast for about 3 years. My background is software. I'm the director of business development here. I've worked in accounting software, ERP software, dental software for a number of years. And, it's been interesting for me to see how the R&D market has changed, just in the kind of 3 years that I've been with Boast. But Alex, you've started Boast 10 years ago, so I'd be kind of curious to hear. Maybe tell us a bit about your background before Boast and what led you to start the journey with Boast.
Yeah, it's been a long time, but it's been the whole time we've been profitable, and it's been growing really fast every year. So it's pretty nice. It's a different company every year, right? So my background is software engineering, and that's kind of been my passion since high school days, even before that. And I've always worked in some sort of computer science or engineering capacity, coding capacity, I guess. And I had a startup before Boast where the startup was successful from a sales perspective, but not a successful company because I totally missed the sort of business model behind it. Just couldn't make it work. But that kind of really introduced me to the R&D tax program and really opened my eyes to the available funding sources to help innovate and really help lower that cost to entry, right, for a startup, which is awesome. So, on the R&D tax side, you get back like 65 cents on the dollar that you spend on R&D, which is like, it's amazing. it's one of the better jurisdictions around the world to be able to do this, and it effectively lowers the cost for development. It makes it one of the cheapest in the world, which is awesome. But once I got introduced to it, I also quickly realized how manual and terrible the process was. So this is part of the Tax Act. It's not a grant. It's it's a cumbersome process that ends up going to the Canada Revenue Agency, and you're going to end up getting audited by the Canada Revenue Agency, and everybody sort of gets audited every 4 years or so. 25% audit rate, so you're very likely to be audited. But once I finished folded that startup, I went and studied accounting. Because that was my my big weak point, I guess, at that point. And I entered this world of R&D tax, which was half engineering, half accounting, and ended up working for a bunch of consulting firms, accounting firms that kind of do this work, and really quickly realized that things should be better and should be done in a more predictable fashion, easier. Shouldn't be this much effort on a claimant. So that's where Boast was born. I started Boast, and with a view of making the process really seamless and easy for our clients, right? And the way we started doing that was by really streamlining the process that we use to prepare these claims and defend these claims, and really have a solid, predictable outcome. And then we started building software on that, and started automating the process, and trying to make it as as predictable at scale as we possibly can. And that's what we've done. And over the past 9-10 years, we've been profitable from day one, and we've just been reinvesting those profits into growth. So we didn't need external funding.
So how did being profitable from day one is kind of ideal? Was there anything specific that you did to ensure that, or was it just the market? Was it where you started? Was it the clients you're targeting? Was it all of the above, or?
Quite literally all of the above. So,
okay.
When we started Boast, I looked around the markets in Canada, and geographical markets in Canada, and then very specifically industry, and quickly realized that Calgary was a good place for us to start, because everybody that all the big accounting firms that were doing R&D tax and helping their clients with that were really focused on oil and gas, and that was kind of the world in Calgary 10 years ago, 9 years ago. And at the same time, there was a big boom in tech companies and technology firms that were helping a lot of the oil and gas industry, but weren't really considered oil and gas. So it left a big window there for us to go in and provide value into a market that wasn't as competitive as some of the other Canadian markets. And we knew exactly how to provide value to the software industry, and so the ICT, information communication technology sector, and that's how we started. That's why we started in Calgary. And then the second part of that is we're profitable because of pricing. So we didn't go into a market saying we have a cheaper offering. We went to a market saying we have a much better offering that saves you time and is very compliant and has a predictable outcome. And yes, we're not cheaper than the expensive guys, but ultimately the ROI is much better, right?
And was that a challenge initially to be able to present that value as a startup, right? Like I understand, 5, 7, I come in 7 years later, that value is kind of easier to demonstrate. Is there anything you do specifically as a startup to be able to how do you get those first clients, or how do you present that value?
It is very challenging. So, you're like, two guys in an apartment trying to tell somebody that you can deliver better value. And, it's hundreds of thousands of dollars on the line, right? So somebody really has to take your word for that and trust you. So, the first thing we have to do is really make sure that we get the word out and people understand what that value proposition was in a concise way, and use a megaphone to do that. So looking around what adoptions that we had We looked around at how we tried to identify how we can, what resources can we use, who can help us get that message across, and or give us ideas on how to get that message across. Same thing we're doing here. And we soon realized that there just weren't a lot of resources, and the community, the startup community, really wasn't that developed. So what we did is we put it together ourselves. We went and started Barcamp. We started like Mobile Monday. We started a whole bunch of initiatives, and eventually we put them all under startup category. But we went and started all these initiatives to scratch our own itch, to really learn, right? So we looked around the market. We looked at software companies that were larger than us, had $1 million in revenue, or 2 or 3 or whatever, and went to those founders and said, hey, would you like sharing your story? And when we brought them down selfishly, we really tried to learn ourselves. So we asked them all the questions we wanted to know, right? And we asked them in a public forum, so everybody else can learn as well. And that has really helped. It really helped us. Learn how others have done it and what has worked for others, and 2, has really helped us build a strong community that helps us get our own message across, even though we don't do it purposely. Obviously we're still sort of attached to that, so there's like brand rub to that, right? And has really helped us learn a lot of the get to know the leaders in a lot of these organizations that eventually became our clients, right? So it kind of was a win-win. And every community we go into, and our own organization, I mean, every community we're in North America, we really encourage that community involvement from a professional perspective, but as well as personal. So giving back in whichever way you're comfortable giving back in is really, really important. So whether it's through volunteer work at your local like immigrant society or whatever it may be that you're interested in, all the way to being involved in at a professional level, the way you are right now, right? Trying to make everybody in the community aware that there are some companies out there that have gotten to 10, 20 million in revenue, and have done it in a slightly different way than the traditional venture capital route. And if we can bring awareness to the fact that it's possible, maybe and make ourselves able to answer future questions as well, maybe that will benefit all of us, right? So there's that rising tide floats all boats idea, right?
And that was like an intentional thing then to be I guess driven by funding, wanting, or lack of funding initially, I guess, wanting to be part of that community. And did you see it? Were there things? Or go ahead.
We never had a funding problem. We didn't want funding, right? So you're starting a business, you have an idea, there's a market, you have a compelling offering. You need to kind of go and test to see if you're right about all that, right? Is there a market? Is there a compelling offering? Are they willing to pay what you think it's worth, the value price? And the first thing some people do is try to go funding in that situation, and that's a very, very tough one, right? You kind of didn't eliminate any risk, and you're asking somebody else to join that risk with you, and it's a tough one, right? So our first goal was to eliminate some of those risks and really see how we can scale. It turns out that our profit margins were strong enough to allow us to grow without needing external funding, but really we wanted to eliminate those risks.
And you said, it was the 2 of you, right? So the co-founder Lloyd, he's not on here today. We would know Lloyd's very gregarious. I think everyone would know if he was here. We wouldn't miss him. But when in terms of what about with growth internally? When was it that you first, other than Lloyd and you, when did you start bringing employees on, or what did that look like? Was that a challenge? Trying to grow internally while staying profitable? Was there anything there that was difficult for you?
Yeah, of course, right? It's there are always challenges when trying to do that. So we brought on employees. I think the first one was 12 months after it started, or so, maybe a bit more. But and it was sales, right? And second one was on this customer success side. But really, from the get-go, we said we're not going to bring on anybody that doesn't touch revenue in some way. It's either sales or revenue generating. So no overhead. No marketing spend, no overhead. That was kind of our goal, right? To be able to maximize our net income. To pile that back into growth, right? That was the whole goal. So everybody that we brought on for many years actually was purely revenue generating in some way, right? It touched the revenue chain. No admin, so we didn't even have finance functions. So we tried to automate and make do on all those functions that weren't client facing at all. It worked for us. It was great. And then we, the first non-revenue touching functions, I guess, were the software engineers to help us develop our platform and technology, right? And again, in a way, of course, that is revenue generating. That helps us stay competitive. But those are the first hires that weren't touching revenue in some way directly, like immediately.
So yeah, you always had the target there that if you're going to bring someone on, then yeah, it has to be revenue generating. Interesting. And then you go from here. Did you find any, when you're growing and like that, were there constraints that you hit where you looked at funding at all? Like, I know we'll get to the point now where last year, right, we raised the Series A and brought on private capital, but that middle point, were there areas that you looked at funding, whether that was venture or debt or other types?
Yeah. So debt financing is always great. At the right rates. Of course, right? So we took advantage of IRAP, we took advantage of our Shred, and like literally everything that was available to us. Of course, right? It's very, very important. So that's the low hanging fruit, right? Go to a bank and try to get a loan. Try to become bankable, and even the way we did that was, you go to BDC. You take a loan with a really crappy term, right? Like 8% or 9%, whatever it is they give you. And we took a very small loan, but that helped us become bankable, right? The year after that, we went to, RBC and said, hey, give us a loan. And they did. So, we sort of build up that history, even if you don't necessarily need the money or it doesn't make a big impact anyways. It was really important to make sure that we position ourselves in a way that allows us to have options in terms of debt financing, government grants and banking and so on, right? So you have to think about that really early on, because everything you do, you can really accelerate that process of when you become bankable, right? And the second was obviously turning down potential business, right? So, very early on, we said there's a real opportunity cost to us taking on every client we have or every client we come across, right? Let's focus our resources on on the higher net margin clients, of course, and try to minimize that opportunity cost as much as we can. From the get-go, we always said, look, 10% of our clients can be revenue net income loss clients. So basically clients of any size. That was our way of giving back to the community. But we said 90% of our effort can't be focused on net loss clients, right? It doesn't make sense. We wouldn't be able to grow. So, so we came with thresholds in terms of what we're willing to sign from a client perspective and who we want to work with. So actually the majority of our clients that we ended up talking to, we didn't actually end up working with. We tried to help in some way, of course. We always try to point them in the right direction and really, really provide a lot of guidance and give them some value of some sorts. But at the time, it was just critical that we focus on our core, client, core client persona, right?
Well, in doing that, right, it's interesting. Did you have so you didn't really have right? You're growing, you're profitable, you're accessing, right? Like you're saying, the low hanging fruit, the debt, Shred, IRAP, these types of non-dilutive funding. Mm-hmm. Were you approached by VC or other? Was there ever any interest there, or maybe tell me a bit about that. It's interesting.
Yeah,
it's a bit different.
We were approached by potential acquirers, so some of the accounting firms and so on. They all wanted to, acquire you in some way or another. Really early on, when obviously it was really cheap for them to do so, and we always turned that down because we weren't the culture fit for them. We're a tech company, a software company. We don't really fit very well in an accounting firm, of course. And then the second was, of course, the tons of VCs approach you, and early stage, seed stage VCs and angels that want to put in some money, and those are always sort of the tough decisions that we've had to make. I wanted full control and autonomy of how we're going to grow and scale the business, and what is a shiny object versus actually core to our business, right? So avoiding those shiny object distractions. They all seem like awesome opportunities at the time, but they're not, they're not necessarily additive to your core value proposition. So staying focused on that core value is really, really important. And it's really, really easy to get distracted from that because, we're thinking big picture, right? We are working towards becoming the R&D system of record, right? Which means a whole lot of things for all our stakeholders, is CEOs, board, CFO, CTO, and all of a sudden, everybody has their own needs, and we know we can meet those needs at some point. But when is the right time to dedicate resources towards that versus the core offering or the core value that you deliver, right? So, for many years we said, nope, here's our core. We defined it really well. We're going to do R&D tax, and we're going to kill it. We're going to do extremely well on that. We're going to provide the highest value we can. Take the least amount of time from our clients to provide the highest value we can. So maximize the claim and do it in a compliant way, right? And that was our focus. As soon as we go and take money and you get venture capital, you get a board of directors, board of advisors, whatever it may be. And then you get distracted, right? You end up spending a lot of time on board stuff and convincing people why your approach is right. And sometimes you may lose that fight, and it can be fatal to a company, right? And we've seen it many times. We've seen it from a lot of our clients. We work with hundreds of clients, all of them, going through that growth stage, venture capital, and some very large. And at every stage, we see them make mistakes like that all the time. And we, unfortunately, they're not clients anymore, right?
Well, it's interesting then, because I definitely can understand that. Then, if we fast forward maybe to this year, to 2020, where you did Boast did raise a significant amount of money with Radiant Capital to help accelerate our growth. But so what changed? What flipped? Was that something that you went looking and said you want to accelerate Boast, or how tell me how did that happen?
It was a number. So it was a bunch of different factors, right? Obviously, one was COVID, kind of hit out of nowhere. Made me realize that there is maybe a business risk that I didn't account for. I think that happened to a lot of businesses.
I was going to say, yeah, if you had there's not many people that were ready for 2020, yeah. but so definitely, yeah.
We weren't the only ones, but you kind of chugging along and going, I'll mitigate all the risks that I'm aware of. And then there's this big one where, for a couple of months they kind of didn't know what would happen, right? Maybe a month, and then we figured it out. But you didn't know it's like, business is done or, life goes on, right? So that was one major sort of, change last year. And the second one was also, we're getting really large, right? Growth is becoming extremely expensive, so there's this good and bad to being large, right? The bad is that if you're trying to bootstrap a very large, top line revenue, all of a sudden you also need a lot of available capital to do that. To hire and carry that, for some time until you see the return. So it was getting very expensive for us. We knew that, we have a massive business, a massive opportunity at scale. We kind of figured out how to do it at a decent enough scale that, it was very plausible for us to think about the next goal, which is 100 million. How do we get to 100 million, and how do we accelerate that timeline? I don't want it to take another 10 years, right? That's a long time. So so venture capital was kind of the thing that was on our minds. And at the same time, Jordan from Radiant Capital and Chris Livingston, they approached us, and it was kind of just random. I mean, they just wanted some venture deals and so on, mostly from Lloyd. He's out there in the community a lot and sees a lot of companies. So they go, hey, come on as a venture partner, right? And while finding out what he actually does for a living, which is Boast, they became really interested and we had I think, I had a conversation with them. I think maybe it was like a 45-minute conversation, and then they sent a term sheet right after. So I was like, oh man, like, because we weren't looking to raise, we didn't have a pitch deck, we had nothing, right? And it kind of came out of the blue. So all of a sudden, we had to make a decision. But I think timing kind of worked on their end. Timing worked really well because we had COVID and we had this massive growth to deal with and great opportunity that we're already thinking about how to address, right? So timing worked out really well. And of course, I was looking for one investor. I didn't want multiple investors. I also didn't want to shop it around. I wanted to do it on our terms, and which is maybe not the standard sort of venture capital deal. I still wanted to keep control and a whole bunch of other things that I really cared about, right? That at scale matter. So the timing worked, and they and I really enjoyed working with them even up to that point, and getting to know them, and yeah, I mean that's how it kind of came together.
And how long did you say? Maybe I misheard or misunderstood it. Was it just a 45-minute discussion that you had, or there must have been more? Like, how long was the process? Or was it you had a 45?
The process was a bit longer, right? Of course, but to get to a term sheet was literally 45 minutes. Like there was nothing to that, right? It was just that one's easy. But yeah, to close a deal, of course, there's due diligence that has to happen, and make sure you have all your ducks in a row. Your IP ownership is yours, and all that stuff that early stage founders really need to think about. And I think mostly they don't. But make sure your employment contracts are in place and are correct. Like they address IP, and your vendor contracts have all address IP, and all that very important stuff that everybody looks at. Make sure every VC that's ever going to look at you is going to do a quality of earnings type of analysis, right? Basically making sure that you're not making up your top line revenue number, right? Make sure that it's actually accurate from an accounting perspective, and it actually it is, and it is something that's receivable and somebody will pay. But that process was also fairly quick. Like it wasn't very long. I think we kind of dragged it on because we were going through August last year, and I remember I was like going to Whistler for a few days, and it was just everybody was on vacation here and there, and we dragged it out more than it should have been, I think, just because we weren't really in a rush to close quick, but. But yeah, I mean, it's the decision was pretty quick on their end, and quick on our end because we really enjoy working with them, and that's the most important thing, right? Make sure you work with somebody you like, because they're becoming your partner, right? And we will have to see the business the same way, at least through the next stage, which is get to 100 million, right?
So is that what drove it more than was the relationship that you had with them, or you felt, you guys were wanting to push towards the same thing?
Yeah, absolutely. Yeah, it was 100% relationship, not valuation. We didn't go maximize for valuation. We didn't go shop it around. We have a ton of inbound from VCs on a weekly basis. I get 2-3 emails at least, and we're never interested. We always take the call. We're very polite, and we always look for deal flow from them, but we very politely always decline. So it's all relationship based. It's all the fact that we do see the business the same way. Their business model as a venture capital fund also aligns really well with ours. They're not sort of the boom or bust type of investors, which I appreciate. And the expected returns on capital were very aligned with what I think we can easily provide. I mean, we'll blow it out of the water for them, so I think they'll be very, very happy. But the expectations were not so sky high that they will force us to make inappropriate decisions in the short term, right?
And And going through this process, I mean, during, right, you said the pandemic brought some of it on. Was there anything that was different doing it during the pandemic, or just that we do it on a Zoom meeting instead of you go for beers with them, or was there anything there that was?
Well, surprising enough, it wasn't really that different. I mean, it kind of sucks that it was over Zoom. It's nice to have a drink, not, it's nice to see somebody face to face, and you miss a lot in the room. And I think Jordan said the same thing a few months ago, where they kind of tried to pick up on physical cues, like in a room, right? If I'm saying something and so the CTO says, face says something else, it's hard for them to pick that up over Zoom. But again, from our perspective, same thing, right? We're trying to see, judge how genuine sort of the pitch is, right? And really, we have a lot of tools to do that, and that's speaking to their previous investors and founders, and really back channel as much as we can. And when we did all that, and whether it's over Zoom or in person, you can still accomplish the same thing, and you just have to adapt, right? But it shouldn't be any different. The process is not any different. It could actually happen quicker because you can, you don't have to travel, right?
Yeah, can you compress everything? And it sounds like maybe you did that a little bit here in this case.
Yeah, in certain stages of it, for sure, right? It was just easy to pull up documents and pull up information as we're talking, to get them to a term sheet in 45 minutes if we needed to, right? And that wasn't even actually the intention. We're just like kind of excited talking about our business, right? That's what we do. You start talking about your baby, and it becomes very exciting, right? Yeah.
Yeah, no, that's R&D tax at parties. That's I totally understand. I'm the same page.
When you have the right audience, it gets exciting, right?
Yeah, no, and it is. It's an interesting space. You're working with interesting companies.
Yeah, and think about it. For every dollar in R&D spend, you end up with a multiple of that going back into the economy, right? I think the latest numbers were something like 20 times. So, for every dollar of R&D spend, it generates $20 for the economy. So your local economy, your region, country, whatever, which is amazing, right? So, think about it. We're working with companies, getting them hundreds of millions of dollars in R&D funding, additional funding that they wouldn't otherwise have, and that turns into literally billions of dollars in benefit for the economy. So of course it's fun, it's cool, it's exciting. Like we see our clients grow all the time. They started with 10 engineers, and next year when we file another claim, they're all of a sudden at 30, 40, right? 50, which is amazing, right? Like that's what we want to see. So anyways, it's exciting from my perspective. It's very exciting.
No, that's good. I think that's important to, you have to be excited about what you're doing, and definitely I could see that. Yeah. One question I had that was kind of, so it's interesting, and I wanted to hear about the funding piece, but to kind of take a step backwards, right? Or you'd mentioned there in the funding that, right, wanting to get to, you got to the 10 million revenue mark and wanting to get to that 100 million and using the funding to help accelerate that. Was there anything harder or the journey from, to get to 1 million in revenue, and then to get to 5 million, then to get to 10 million? Was there anything, is it all the same? Is it just the things that you were saying at the start to provide that value to the clients and to maximize the community? Is there anything, going from 2 or 3 people to 20 to 40 in there that you found?
Well, first, we're a different company at every one of those stages. So, going from 1 to 2 to 4 to 8 to 12, you're a different company at every one. In terms of our core values and what we focus on, we've changed some of those along the way, but the real core values, which is community, team, clients, those haven't changed, right? Always doing the right thing for our team members, for our clients, for the community. That's been constant throughout, and that's what has really helped us. It's helped us not just as an organization, but it's actually helped us. It's helped me, feel really good about what we do and how we do it, right? So, you know, I sleep really well at night knowing that we do the right thing. It's not financially driven and motivated. We're actually doing the right thing, that, you know, and we stand by it for our team members, for our clients. And that has stayed constant. That will always stay constant.
And what about, is there anything, you know, not to say, is there, you know, there should be no regrets or anything, but is there anything you would do differently, or you would have done sooner, or you would have done later, or you would recommend, you know, right? I think it sounds like when you did take on funding, it was the right time, but before that, you know, are there anything in that journey that you would have changed, either to accelerate or to slow things down, or?
No, you know, definitely not slow things down. That's for sure.
No, yeah, maybe, yeah, that's not, yeah, I don't want to slow things down, but
yeah, you know, from an acceleration perspective, you know, it's always nice to go faster and go harder. Looking back, obviously, I understand why we made the decisions we did, you know, with the constraints we had. Maybe I would have spent a little bit more time trying to eliminate more constraints than we already did. You know, we took a fairly conservative approach to you know, to the risk we took in terms of growth. So we said, look, if we can get to 100% growth, you know, and if we can do that with minimal risk to a company, then that's what we'll do. We're not going to push for 150, right, with increased risk. So then, you know, fairly conservative, but still hitting our growth targets over 100% or more. But, you know, looking back and thinking about what we could do different, we were in a very unique situation at the time. So we're in an industry that once it wasn't venture back, you know, we didn't have a lot of venture back competitors. It wasn't a race to, you know, race for market share. And it really allowed us to become market leaders at our own pace, which was really nice. You know, this is another reason why we went down the venture capital route last year, because we're starting to see more venture capital come into the space. So, you know, we would have been at a huge disadvantage without it. So, you know, looking back, I don't know, we did things right. I think we could have pushed harder in certain areas and grown a little bit faster and taken a little bit more risk. You know, in hindsight, it's always easy to sort of identify the risk as being minimal. So, you know, what we thought might have been, you know, were some big risks didn't really pan out to be big risks in the first place. So, you know, in hindsight, we could have been more aggressive for sure. I think everybody I talk to, all my friends, you know, the large companies and so on, kind of say the same thing, right? You know, venture capital, early stage venture capital backed companies usually take really big risks because they are encouraged and pushed by the VCs, right? Which is a good thing. It's not a bad thing. So kind of know the line where it's too far, but it's good to be pushed. We didn't have that, right? We weren't really pushed. So we could have grown faster.
Yeah, that makes sense.
We're not making that mistake this time, though.
No,
like, going forward, you know, it's all about maximizing.
There's more risk tolerance now with the growth.
Absolutely, yeah. Well, and just more resources and understanding what those risks are. So, you know, we have a lot more smart people that have been there, done that. You know, some of the executives we brought on board have all gone to, you know, 50, 100 million revenue and even past that. So, you know, there are more resources to help us mitigate some of those risks or fully understand them, so we can make the right decision.
And it's, you know, that kind of is interesting, because I wonder, you know, we're talking more about how the Boast itself grew, but you know, bringing executives on now that have gone through it and gone through the process, you know, but for yourself, you had mentioned, right, starting as you know, your background was software engineering and then accounting, and then starting Boast. Were, you know, maybe the answer, maybe I know the answer is maybe it's going to be community and who you surrounded yourself with, but were there things that you did to mentor, you know, you personally as a business owner, as the CEO of Boast, or anything there? Is it just an ongoing thing?
Yeah, it's an ongoing thing, right? Looking for resources and information. It's a tough one, right? Because you know, it has to fit with your personality type as well. I know a lot of the guys you kind of, you know, and a lot of my friends as well. You know, so the extroverted types that love to join a lot of roundtables and, you know, CEO forums and groups, and that's great. It's fantastic and it works for them. And then there's like my personality type that maybe is not quite as extroverted, and I'm not a huge fan of the big round CEO groups where maybe I don't get my answer. I don't get the chance to get my problems really addressed, right? So constantly looking for the right individuals to reach out to and build those relationships at every stage is really important. I've always done that to some extent, and I think I need to make a bigger effort to do it, but there's a lot of value in doing that. So, and at every stage of the company, you're gonna have to find the next, you're gonna have to find guys that have been there, done that, and are willing to listen and provide some feedback and give back, right? And lucky enough, along the way, we found a lot of them, which is awesome. And in return, we're very willing to do the same for the next guys, trying to make it to 10, 20 million, right?
Nice. And was that maybe, I was curious with, he's not here today, but, Lloyd, co-founder, who is maybe more of that outgoing personality, was that, how did you and Lloyd connect up, or how did Lloyd become a co-founder? Was it that you both, you were the quiet engineer guy? You're not quiet, but the quiet engineer guy, and Lloyd is the outgoing guy, or how did?
Yeah, so me and Lloyd have known each other forever.
Oh, okay.
We went to school together, right?
Oh, nice.
We've
Okay.
known each other for over 20 years. We went to school together. We actually even worked together at some point for a short period of time in Toronto. After engineering school, he kind of went towards marketing and sales, and that's what he did. And I went towards the software engineering side and so on, and then accounting and sort of business side. When I first thought about Boast and starting Boast, I kind of reached out to who I thought would be a really good fit to augment my skill set, right? So we brought Lloyd on, and Lloyd is definitely, he's like the 180 from me, right? In terms of personality. So, he came on board, and I said, hey, be the face of everything, and do your thing out in the community, and that's what he does, right? And then that's what he does really well. That's what he really enjoys doing. Yeah.
Yeah. No, we all have our strengths and preferences, and I was just curious.
Yeah. Augment your skill set, right? With something that you don't have, or you don't have a lot of passion for, right?
Yeah. No, 100%. Yeah, no, that's good, and that's kind of gives kind of an interesting overview of both, Boast and yourself. Is there anything, I know we went through quite a bit, is there anything else that you can think of that that helped Boast grow from where it is to now, that you were able, anything specific other than the things we've mentioned, how you're able to bootstrap to the point that you got Boast to?
Yeah, I think it's really important for a lot of early stage founders to really start identifying and thinking about the metrics that they want to track in their business, and aligning that with sort of the industry norms for whatever industry they're in. That's an important one that I don't think we did very well to begin with, but it's really important. So, what we did really well is identify, what matters to our cash flow and track that really well, which is good. But we should really, obviously we've rectified it over time, but really identifying those key metrics for your business as it relates to your industry peers, and making sure that that you really try to hit those industry best standards for some of those metrics, like revenue churn versus client churn and so on, right? For us, like, client churn wasn't really a problem. We never really tracked that. What we tracked was revenue churn, right? And we really cared. Basically, for us, it was really important that we do a good job for all the clients that we work with, regardless of the size they're at, right? So it didn't matter if we're working with the client that paid us $100, or a client that paid us $100,000. We put in the same effort, right? But because that's the approach we have to doing work, it does really matter, what clients we pick and choose to work with, and how they end up churning out and like not becoming a client, right? And most of our churn, as you know, is involuntary attrition, like, a company gets acquired or whatever, right? But for us, tracking the number of clients churn, it's not really that important because we didn't have a lot of influence over it or a lot of impact, right? It was all involuntary. The vast majority was involuntary. Like, we had years when we had no voluntary churn at all, zero. So, for us, looking at the revenue churn and sort of upsell and downsell of that is really important. So looking to see how basically our clients' R&D spend grows up, over time or down, and really helping our clients understand, the impact of that, and really help them with some of those R&D spending decisions. That was really important for us. But we totally ignored all the rest of the, our CAC was so short that it didn't matter. So, even our total addressable market we ignored, right? For the most part, we understand where what our ideal market looks like, and that's what we kind of sold into. But we kind of ignored everything else outside of that, right? We never really cared because we knew we had so much room to grow in the one market we're in that it was a problem for later. In hindsight, the earlier you do this kind of work, investigative work, and make sure you get all your numbers right, the better. Especially if you're looking for venture capital, of course, right?
Mm.
It didn't really stop us because we got to such a big size that it didn't matter. But it's important for a lot of early stage companies to just really get those numbers right, because it gives them credibility when they're speaking to any investor, right? And the investors will know more. If the investor is interested in your space, they will learn that space and they will know more than you do. Hopefully not, if you do your homework early and well, right? So the goal is to make sure that the investors don't know more than you do about your own space, right?
Yeah, that's a good piece of advice, definitely.
Yeah, it sounds funny, but the investor's job is literally to research and look at data, and they have a lot of dedicated team members to just doing that. So it's much easier for them to aggregate this data and really slice it and dice it in a way that they understand than it is for you as a company. But it's important for you as a company to look at the total market, addressable market for you, and really understand it, segment it well, and so on.
Perfect. Well, thanks. Well, I think we've got maybe 5 or 10 minutes left here. I didn't have any other questions for you. It's fun. I like getting a chance to chat with you like this. But we'll do it more often, where I do get to interview you. But no, I really appreciate that. Maybe what we'll do, in the last 5 minutes, I don't know, I didn't see if there's any questions on the Q&A there or on the HOVA. I wasn't sure if anybody has any.
Yeah, it doesn't look like there's anything on HOVA yet. So if any of the here we go, one just popped up. Any tips on remote teams? I know the Boast team is spread out. Yeah,
we are spread out all over the world, actually, like Europe, Latin America, North America. We're always a remote first culture. So offices were always optional for us, based on individuals, team members' preference. Make sure you have all the right communication tools in place, and then make sure that everybody's very comfortable using them. So building those relationships is really key. We always had a company offsite where we took the entire team to some nice warm destination in the middle of January, like Cabo or Hawaii and Costa Rica and so on. And that really, really helped with team bonding and making sure that the team knows each other, and really facilitated that communication once we're back in our, homes or coffee shops or whatever it is that we work from. So, have a process to make sure you really facilitate those conversations.
Yeah, and I think make it, part of, as a, an employee of Boast, I would say, make it, if it's part of the daily thing, you can make, it's harder to have a remote culture, but you make that part of the culture, and you don't have those spontaneous water cooler conversations, but you kind of force them. You can not force them, but you set aside time to do those. And I know we do that, within our teams and across teams as well. You just kind of have to, I think, force it more to make it natural, if that makes sense.
yeah, make everybody comfortable with a new way of doing things. And I know, pre-COVID, it was always an adjustment when we brought on team members that were used to sort of the cubicle world and office environment. And we told them, hey, look, you don't have to be here, and nobody's going to look over your shoulder. And nobody cares how much time you spend in front of a computer. But we measure results, right? And here's what we measure, and here's everybody's results in the company, right? That was always like a 3 to 6 month adjustment for every team member we brought on. And now with COVID, I think more are used to it, and there's a huge benefit to the new way of working. It's kind of working well for us. Easier to bring team members on and make them comfortable with this new way of working. But that was always a challenge, right?
Cool. I don't know if there was any other questions. Anybody saving the super hard questions for Alex? So the Friday afternoon, can try to hammer him while we've got him for the last 2 minutes here.
Nothing yet, but if any attendees have any last minute questions, feel free to drop them in now.
Yeah, and if there's anything that comes up, after the session, Alex and I are always happy to chat. Whether it's about Boast, Alex's journey, or of course about R&D tax. As Alex and I were saying, we're fun at parties, but reach out to us on LinkedIn. Send us an email. Right? I think Alex, am I correct? We're always happy to chat.
Absolutely. Yeah, for sure. If anybody needs to bounce ideas off of us, we're here.